Welcome everyone to this Monday edition of Inside India. I'm Sri Jegarajah. Here are your headlines. A fragile ceasefire between India and Pakistan seems to be holding, even as both sides accuse the other of initial violations. Investors are awaiting more detail from the US-China talks in Geneva after both sides cited constructive negotiations. And President Trump says he will sign an executive order to substantially lower prescription drug prices in the United States. We'll find out what it means for Indian generic drug makers who export to the US. CEO of Dr. Reddy's, Erez Israeli, joins us later this hour. Welcome everyone to the programme. So traded volumes are light in Asia broadly today as many markets are closed. The open markets, however, are looking positive, in the money, led higher by the Hang Seng Index, which is up by 1%. So the market's clearly liking this current narrative that is coming out of Geneva between the US and China, and Scott Bessent talking about substantial progress in trade talks between the United States and China. Indian markets join us in about 45 minutes' time. Here's what GIFT Nifty futures are indicating, 24,546. So we are looking at a move higher, demonstrably so, to the tune of about 500 points. So the market's clearly there reacting to the ceasefire announcement. Local currency markets remain closed today. For what it's worth, though, let's give you the dollar-rupee exchange rate, 85.3810. Now, on Saturday evening, US President Donald Trump announced that Washington had brokered a ceasefire between India and Pakistan. US Secretary of State Marco Rubio also posted on X, saying that both sides have agreed to start talks on a broad set of issues at a later site. But he deleted this post. Rubio did also speak with British Foreign Secretary David Lammy a few hours ago. They urged New Delhi and Islamabad to maintain the ceasefire and continue communication. India and Pakistan were engaged in a military conflict since April the 22nd attack on tourists in India's Kashmir that killed 26 people. Let's get out to CNBC TV18's Parakshit Luthra, who has been closely following the story. Parakshit, so both India and Pakistan have stepped back. There are reports of violations. It just feels to me that escalation and de-escalation are really poised on a knife edge.
You're absolutely right. Today, the Director General of Military Operations of both countries are scheduled to speak at noon India time. Why will that be important? Because this is the first time that top military leaders will be speaking in an official format on the hotline after the understanding was reached on 10th evening to stop military firing and action. I'd also like to point your attention to the fact that India is not using the term ceasefire yet. They are saying this is not a ceasefire. There is a lot more to be discussed and done on the ground before we can call it a ceasefire. Having said that, the good news is that the night was relatively calm. There was no incident of firing at the border or any kind of drone attack after about 8 p.m. in the evening. This was the first calm night, according to our army sources, in the last 1 week or so. Having said that, the Indian government has gone on record to say Operation Sindoor, or this military action against Pakistan for the Pahalgam attack, is not over. We will retaliate very strongly in case there's any future terror attack from Pakistan. In fact, we will treat it as an act of war. The Indus Waters Treaty remains in abeyance. The visas for Pakistani nationals continue to be suspended. So does trade, air services, and shipping lines as well. So India is saying nothing changes on the ground. We're also not accepting anyone's mediation in this matter. This is a bilateral issue.
Parakshit, thank you very much indeed for that. So quite clearly an uneasy calm has descended. Thank you. Pakistani Prime Minister, in the meanwhile, Shehbaz Sharif, thanked Washington for mediating the ceasefire and said other issues with India will be resolved via dialogue.
Pakistan banaya tha. Al jihad, al jihad. Al jihad, al jihad. Army chief kadam badao. हम अपनी फौज से मजीद मुतालबा करते हैं
Pakistan also received approval for a $1.4 billion fresh loan from the International Monetary Fund. The loan was approved. Under the fund's Climate Resilience Fund, the global lender also approved the first review of its $7 billion bailout for Pakistan, acknowledging significant economic stabilisation that freed up about $1 billion in cash, bringing the total money dispersed to $2 billion. India, on its part, had registered its protest against the IMF's funding. Let's get more analysis on the situation between India and Pakistan as it stands. Harsh Pant is with us now, Vice President of Studies and Foreign Policy at Observer Research Foundation. Harsh, thank you very much indeed for joining me. India, as you heard from Parakshit, my correspondent there, has said it's not using the term ceasefire yet. There's still clearly a lot of work to do before both sides get there. Would you agree?
I do agree, and I think India, for example, from the very beginning has been saying that, look, the ball is in Pakistan's court, because India's initial targets was terror infrastructure in Pakistan and terror bases in Pakistan. So after that, Pakistan decided to escalate by targeting civilian facilities and military installations in India. So from India's vantage point, the idea was that, look, if you want to de-escalate, then Pakistan has to decide whether it wants to de-escalate or not. So clearly on the ground at the moment, there is an uneasy calm that prevails. And I think it would be, both sides would be hoping that calm continues. But there have been so many false hopes in the past with Pakistan that I don't think anyone in India in particular believes what Pakistan says. And I think that lack of trust with Pakistan continues to be a big challenge. And I think it will continue to hang over the relationship for the foreseeable future.
Harsh, Parakshit also mentioned a lot of back-channel diplomacy going on between both these two countries, and the next step in this process is security chiefs are going to be having a dialogue on the hotline. What do you think is going to come out of those conversations?
I think, at the moment, the conversations are very tactical in nature, in the sense that the conversations are going to be about ensuring that ceasefire on the border continues, the border areas remain calm, that there is no untoward shelling and untoward use of force and violence along the border areas, which had been the real problem for the people on the border areas. So I think at the moment, the ambition is quite limited, and largely the engagement is going to happen at the level of border security chiefs. As you mentioned, they are called the Director General of Military Operations, and they are going to talk to each other and ensure that the border remains calm. But beyond that, a broader dialogue, I don't think is in the offing at the moment, at least not from the Indian side.
Harsh, to my knowledge, there is no third-party observer who can independently call out ceasefire violations. Is this ceasefire agreement, as it stands, simply too broad in scope and lacking in details and open to interpretation and open to misinterpretation? Is that the problem here?
I think there is some problem that might arise because of that, certainly. But I do think that, in this particular case, for example, here the ceasefire, because India and Pakistan both are used to having ceasefire arrangements along the border. Border has been very volatile, as you know, in the history of India and Pakistan over the last 75 years. And at this, and I think the two sides are used to coming to an understanding where they do a limited ceasefire along the border, where they do not shell each other, where they do not use artillery against each other's border areas. And so there is a template is available on both sides to agree to should they want to move in that direction. And so certainly I think while it is open to it might be open to interpretation, the present understanding. But as we were discussing, if the two security chiefs, the DGMOs, the Director General of Military Operations on both sides, come to an understanding that India and Pakistan are quite capable of holding on to ceasefire. I think the problem arises when there is political pressure, particularly on the Pakistani side, to escalate through the use of proxies. Yes. That the groups, and that creates a problem.
Yes. Harsh, is there any scope for a United Nations implementation force or a ceasefire monitoring contingent, anything along those lines in the disputed areas that can monitor this ceasefire and perhaps act on any violations? Or does it open up a whole can of worms in terms of the sovereignty issues with regard to both of these respective countries, India and Pakistan? Is that a non-starter? UN peacekeeping mission?
I don't think that. I think that that's a non-starter because the two nations had decided long back that they won't have third-party mediation in these conflicts, particularly the UN. India would not like that, and India has consistently said that this is a bilateral matter that and should be resolved bilaterally between both sides, and both sides agreed in the Shimla Agreement in 1972 that this is something that they would want to pursue bilaterally. So I don't think there is any space for UN and UN-like agencies, but certainly in a sense, what has happened in this particular case is that a number of countries have come and have pushed Pakistan to see the light of the day, and in some ways come to the negotiating table or come to a ceasefire agreement, which, as you say, Indians and Pakistanis are not calling it ceasefire at the moment. It's a mutual bilateral understanding, as they say. But clearly, the international community has been able to convince Pakistan, in this particular case in particular, that escalation dynamic is quite visible. It was visible in the conflict, and it should be avoided. And that has brought, I think, given what you were reporting earlier about the IMF loan, all of those issues that Pakistan was facing has allowed this particular crisis to come to this point where we are talking of a potential of an emerging ceasefire-like arrangement in the region between India and Pakistan.
Yes, and Harsh, you mentioned those economic pressure points and importantly the Indus Valley Water Treaty, which is still being held in abeyance. At what point does India feel it can loosen those restrictions, which appear to be staying for now, because quite clearly India wants to teach Pakistan a lesson from an economic point of view?
Yes, I think, if you recall, when the crisis started, India started taking a set of calibrated measures, which were diplomatic and economic in nature to begin with. And Indus Waters Treaty, which India had not really touched since its inception, came back to the table, and India had put it on abeyance, underscoring, the seriousness of the crisis that this was. And unfortunately, at that point in time, Pakistan did not realize how serious this would get. But this was certainly one of the markers early on in the conflict that India this time is very serious about the consequences and the costs it wanted to impose on Pakistan. And so I don't think that at this point, India is going to change its mind on many of the measures that it had taken, particularly on Indus Waters. But eventually, if things settle down, I think it might be a signal from India that Pakistan is doing something right. But there have been, again, as I said, there have been so many false starts in the past that I think India would go very slow this time, because India, as I think your correspondent earlier was also suggesting, has now changed its security doctrine dramatically, saying that, look, any act of terrorism would be considered an act of war by India now. And this is being done particularly in light of the dastardly act that happened in Pahalgam, which started this whole crisis. So I do think that this time it's very serious, and it's unlikely that India would go back on a number of measures, including Indus Waters Treaty, that is started off when the crisis emerged. So clearly, these are, from India's vantage point, this is a difficult phase. And as you have also mentioned, the operation that India has started, India is not saying that it has concluded. So in that sense, I think it is an ongoing operation which would involve a number of aspects of this operation. They also continue to be in place.
Harsh, thank you very much indeed for your analysis. Harsh Pant there from Observer Research Foundation. Coming up at the programme, trade talks between the United States and China making substantial progress over the weekend. We'll discuss what this will mean for the two sides and India, where negotiations with the US are still ongoing. Stay with us. Welcome back. US equity futures are tipping a positive lead for Wall Street when it reopens tonight on hopes that trade tensions between the US and China will recede after what President Trump called great progress over the weekend. Here's what we heard from both sides.
It's important to understand how quickly we were able to come to agreement, which reflects that perhaps the differences were not so large as maybe thought. That being said, there was a lot of groundwork that went into these 2 days.
The two sides agreed on establishing a consultation mechanism for trade and economic issues, identified the lead persons on each side, and will carry on further consultations relating to trade and economic issues of their respective concerns. The two sides will finalize relevant details as soon as possible and will issue a joint statement that was reached at the meeting on the 12th of May.
Let's get some analysis and bring in Trin Nguyen now, senior economist at Natixis. Trin, great to have you on Inside India. And do you feel that the Geneva talks amounts to, with this claim of substantial progress, a breakthrough potentially in US-China relations? And what do you think Beijing has agreed to in terms of concessions exactly?
Well, we're starting at a maximalist position, which is basically at embargo level. And we already had hints before the talks that both sides are willing to come through, given their own exemptions, right? China's side has exemptions that are just not as overt as the US side. But irrespective, at a 145% level for the US for the reciprocal tariffs and China at 125, plus the 20% fentanyl tariffs and existing tariffs from the previous administrations means that there's a lot of room for this to be progressive. So we could potentially have several ways to go about this. You could have the reciprocal tariffs level going down for both sides to a high level, but not as high as where we are. We could potentially have a pause, but all to say that there is a floor to this deterioration of relationship. Some trade is happening. There is still friction, but that friction is not immediately leading to a Cold War, embargo war. And for the rest of the world, that is positive news.
Trin, do you see, it's interesting, you mentioned the maximalist position, but do you see a pathway towards a zero tariff structure between the US and China, or is that just too unrealistic, just given the present set of tensions?
I do think that the US and China are on their way to strategic decoupling. It's a question of pace under President Trump that has accelerated, but it has accelerated at a much worse state. So before on reciprocal tariffs, in which tariffs were escalated, afterwards with China to 145, because it's one of the few countries that have retaliated. In that, people had thought, well, we're getting to a stage where there's no trade and investment and potentially spilling over to capital, and what else is there? Now we're walking from that brink. So we're walking from the edge of the Cold War, but we're not really going towards them immediately removing all barriers, which means from the Chinese side, they will continue to try to have self-sufficiency where they still rely on the U.S. And for the U.S. side, U.S. companies that have huge exposure in China to export to the U.S. will continue to diversify supply chains. If they weren't aggressive at doing so before Trump came into office, what's very clear from end of January until now is that the situation is unlikely to improve, even if they will improve from a very worst case scenario situation before.
Trin, doesn't the entire DeepSeek narrative prove to commentators like yourself that China can really live without US semiconductor chips, and more than that, it's beating the US in the AI race, and therefore do you feel that the bar to a deal is actually quite high between the US and China?
Well, if you look at where China assumptions on the U.S. it's really on engines, right? China has its domestic plane, but it relies on U.S. parts, particularly U.S. engines. So it can, over the longer horizon, import more from Airbus versus Boeing. But fundamentally, given the bottlenecks in existing supply chains, it will need high-tech U.S. goods. So the assumptions themselves point to the fact that these are codependents, right? Boeing does need the China market in the short term, given the bottlenecks. They can ship these planes to other places. But fundamentally, in the short term, it is both interests. It is true that China has done significant progress in tech, and it will continue to strive for self-sufficiency. The trade war that has escalated, and the fact that it got to a certain level where embargo was possible, means that on both sides, self-sufficiency drive will be there, right? It's not going to go away just because we're talking at Geneva and there is significant progress, meaning the U.S. will continue to try to get rare earth. And I think they have a mining that's coming to place end of 2025. And so is China. It would try everything it can to be more self-sufficient because it sees this as a containment by the U.S. On the U.S. side, it sees this lack of trust.
So from a economist's point of view, Trin, is it premature to start pricing in improvement in the global growth environment, given what we know now between US and China? And can we afford to even call off the recession risk and perhaps be a little bit more sanguine about the prospects for earnings and inflation looking more favourable?
Well, I think that coming back in terms of assumptions tell you that the impact is there. There's going to be decelerated growth to the U.S., but it's not going to be a meltdown if we're walking back from the edge, right? So that's a very positive. The second positive is the fact, remember that we still have only 10% reciprocal tariffs on the rest of the world. So you can still order from elsewhere. And the transmission from tariffs into price to the U.S., it's probably not going to be as bad as feared. We're actually going to get some progress. Remember, about 20-ish something % of China trade is already exempt from this high level of tariffs. And so is a lot of the imports from the world. So the U.S. is very well aware that it cannot go in and just throttle all of its imports. And it has to go away in a targeted manner. And that's really the positives from these talks. The positive is Trump is walking back from the break, that he is realizing he must be much more targeted, and change can be happening at a very gradual level in the short term. And that is on both sides of the equation, meaning the impact on earnings is also going to likely be mitigated.
Trin, let's turn the conversation to India, and we've been really struggling with the outbreak of India-Pakistan tensions spilling over into conflict. We have a ceasefire now, and there are very clear implications for both of these sovereigns. I want to play you some sound first from Daniel Markey from Johns Hopkins University and his take on the India-Pakistan tensions, the broader geostrategic picture, and then we'll get back to you, Trin.
Particularly from the perspective of the United States, seeing India being sucked into a conflict with a much smaller neighbor in Pakistan was not the kind of thing that Washington wanted to see. This is important to understand because India is seen here in Washington as a strategic partner of the United States, as a partner that may be useful to the United States to counterbalance the weight of China across Asia. So if India is otherwise distracted and engaged in a conflict with Pakistan, it will be much less capable of playing that role as strategic partner to the United States. And so there are broader geopolitical implications to this as well.
Trin, what do you make of that? And the US clearly has a lot at stake in India, not least of all the prospects for a trade deal with a commitment by India to buy more US energy, more US defense equipment. How confident are you that both sides are closing in on a deal by Diwali, by late October?
The Modi government is very committed to take advantage of what's happening because it understands that it needs jobs, right? Both the U.S. and India are very competitive. India needs to export ICT to the U.S. It needs to capture a lot of the loss of the China supply chain. Apples, etc., will need India to export to the U.S. Moreover, India also needs to target a lot of sectors they ignore, like labor-intensive manufacturing. So for Modi, he has a lot to lose in this Pakistan conflict because it's not in his interest to escalate it. And he has a lot to gain, not just with U.S. trade deals. The UK has just been signed. It's probably going to get also the EU FTA as well. So India is looking outward for growth. It's increasingly depending on the rest of the world. And the world is increasingly becoming more dependent on India, particularly the US, if it's going to go hard at China, because it cannot go it alone. And in fact, the US is not competitive at a much cheaper manufacturing supply chain. And India is a growing market where CPI is positive, where China is deflated. So we need a much stronger domestic demand economy globally to offset the sluggishness that we're going to see in North Asia.
And India could be in line for an FDI boom as the China offset. Trin, thank you very much indeed for that. Great analysis. We're back in 2 minutes. Welcome back to Inside India. We are counting down to the market open in Mumbai, and this is how we are shaping up. Let's give you a glimpse of GIFT Nifty futures pricing. An opening number in the region of 24,548. So if that does materialize, we're looking at a 540-point move higher for the benchmark, and really in reaction to the news over the developments regarding the ceasefire. It is fragile, though, so there's a note of caution as well in the markets, potentially. Dollar-rupee exchange rate at 85.3810. Let's bring in Avi Sadvalakar now, President at Franklin Templeton, India, joins us. Avi, thank you very much for joining me and welcome to Inside India. Let us start with the conflict and the ceasefire, which is a positive development. And yes, lives have been lost on both sides, but as we must, we have to look at this through the lens of the markets and the macro. How are you pricing this?
So good morning first, and thanks for having me. See, I think this is an unfortunate kind of development in terms of just the overall conflict itself. But let's kind of take a step back and realize that this is not the first time this has happened. India and Pakistan have had, let's say, skirmishes or even engagements in the past. And the key has always been that the India growth story, looking at it longer term, is the only way you can look through this. It is unfortunate. Now, the great development is that there has been, and I can say, cooler heads prevailing right now. But the focus for us has always been looking at that long term. And if we do a quick analysis of what's happened in the past, we've had a couple of these skirmishes even recently, right? So in 2016 or 2019. And you've seen in both those instances, while the initial, let's say, even the short-term reaction has been relatively negative, but if you look at the markets, let's say the Nifty 50, 12 months after, it has always been up double digits. So I think the markets tend to react to this negatively, which is natural, in the short term. But if you're looking at it longer term, those secular trends prevail anyway.
So you don't feel, Avi, that these developments are going to derail what is an inherent story of robustness and resilience, and it's not going to derail consumer confidence or business confidence?
No, so I think the key is going to be at what level, how far does this escalate? Now, the developments over the weekend have definitely made it a lot easier, which is why I think you're starting to see the futures up pre-market, because there is a positive reaction. Now, needless to say, if this continues to escalate or if it gets dragged out, obviously then you'd have to revisit that, because in general, I would say no conflict ever actually helps any economy, right? So it's not going to help the Indian economy either. But there seems to be another short-lived, and hopefully we get back to kind of focusing in on what really matters, which is the longer-term secular drivers.
Avi, is it concerning, though, from a leadership point of view in New Delhi, that if security and national security is now of paramount importance and has usurped the agenda, if you will, does that push back the work that's being done in terms of getting and closing a US-India trade deal? There's a lot at stake there. Or can the leadership pursue a twin-track approach?
I think it is a twin track, and it has to be a twin track to a certain extent. While one may affect the other, and actually they would to a certain extent, but each has a different objective, right? I mean, what is happening on the national security side is critically important if we are going to drive that growth in the economy going forward. So our sense is that this would be a twin track. This would be something that is negotiated separately, but it does factor it in. I mean, if you saw that over the weekend, that's exactly what you're seeing so far.
Avi, what does a UK-India trade deal mean for the markets and macro? Because over the weekend we saw, as Scott Bessent described, substantial progress in Geneva between the US and China on trade talks. I know there's still a lot of work to do, but do you feel that there is broad momentum now towards similar trade deals, and ultimately for India a US-India trade deal by Diwali? And if this does materialize, then where does that put the macro in the markets for you?
So I do feel, I mean, if you look at the trade deals, the UK one was the first one that got signed up. I do expect to see a lot more. And to your point about momentum building, I think that momentum continues to build. And if you're talking about hoping to get a trade deal by Diwali, that would be probably one of the best outcomes anyway, especially for a good Diwali. So I don't think there is any restriction in terms of kind of the momentum behind the trade deals. And even the events of the weekend will only spur towards that. So we are very optimistic that you're going to see a lot more of the trade deals, and that would, to a great extent, drive the macro story in India for sure.
Avi, let's talk about opportunities. And the broad thematic that seems to be in favour is the consumption theme, whether it's the banks, whether it's FMCG, quick commerce as well is making great strides. However, we have seen something of a mixed earnings season. What's your take on the earnings season? What has that told us about pricing these sectors?
So if you take a look at the last 6 months, let's say since October last year, right, there has been a bit of a moderation in the earnings growth, right? There is growth still, but there has been a bit of moderation. Now, that moderation is to a certain extent natural. It's to be expected. We are expecting that to continue for the next maybe a quarter or so and then stabilize. So we are long-term investors. We don't worry about necessarily what happens on a quarter-to-quarter basis. We keep track of it. But none of what is happening today would change that. When you talked about that consumption theme, the reason we are excited about that consumption theme is to a great extent driven by demographics. And you've heard these stats in the past, but let's say 65% of the population is under the age of 35. So a very young population. Right, we're talking about per capita income that's currently at $2,400, hopefully going to be doubling in the next 5 to 6 years. So that level of consumption, that level of expansion in disposable income is a positive. And I don't necessarily see that necessarily getting slowed down in spite of what's happening in the shorter term.
Avi, we have Dr. Reddy's CEO waiting in the wings, Erez Israeli. We're going to be speaking to him after we wrap up the conversation with you. But how do you like pharma at these levels, given the balance of risks, especially with the pharmaceutical companies that have exposure to the US?
So from a pharmaceutical perspective, we've always been fans of the longer-term theme, right? And the longer-term theme is, while India is a young population, it is starting to age as well. That consumption of healthcare and pharmaceuticals in general is going to be an important driver. Now, from a valuation perspective, I'd have to say that pharmaceuticals have gone through their ups and downs. From a current perspective, we have not been necessarily looking at pharmaceuticals in a big way, but I will say that the longer-term trends for pharmaceuticals are fairly solid.
Avi, on that note, we'll leave it there, sir. It's been a pleasure talking to you. Thank you very much indeed for your insights on the markets. Avi Sadvalakal there from Franklin, Templeton, India. As we mentioned, we'll hear from Dr. Reddy CEO Erez Israeli on their earnings report card on the rising tariff threat from the United States. We're back in 2 minutes with Erez. Welcome back. We are in the thick of earnings season in India, and one of India's largest drug makers, Dr. Reddy's Labs, seeing a 22% rise in Q4 net profit, while revenue rose to a record high. Dr. Reddy's says it's open to expanding manufacturing in the United States as the tariff threat from President Trump looms large. And just overnight, President Trump said he will be signing one of the most consequential executive orders on Monday morning, Washington time. As per the president, the order will immediately reduce prescription drug and pharma prices by 30 to 80%. Let's talk about this and the outlook at Dr. Reddy's with Erez Israeli, the CEO of Dr. Reddy's Laboratories, joins us now. Erez, great to have you on Inside India. Let's start with the US. And President Trump posted on Truth Social that he planned on implementing a most favoured nation policy for pharmaceutical drug prices. What then does this mean for Dr. Reddy's, and do we know if India qualifies or is eligible?
Yeah, so this is normally related to what you call the innovative drugs, so the products that are still under patents. So they are being sold in very high price, and normally in the United States higher than other countries. So in that kind of a process, they take certain countries and probably go to the best price out of that scope of countries. In the case of generics, it's not applicable because the generics normally give significant discount on those prices. So it's mostly about the big pharma, less about generics. It will create an impact as obviously pharma products will be with the lower prices, and it will impact demand and supply. In a strange way, it's mostly an opportunity for us, but directly the price itself will not be impacted for generics.
I see. So arguably, Erez, you are still facing and still on the hook of proposed 25% US tariffs on pharmaceutical imports. How then is Dr. Reddy's managing this risk from a pricing and a supply chain management standpoint?
When you are discussing with the US customers, and I'm doing it on a consistent basis, the most important things for them is not to have shortages, not to have a problem of sustainability of supply. And we ensure them that. What we do is we are proactively communicating with them and sending inventory, primarily to the United States. And we understand that there will be a period of time in which people will understand how much is tariff and how exactly it's going to be computed and who is paying what, from which country of origin. So will it be likely a kind of transition period in which people will have to figure it out, and hopefully the inventory can cover for that.
But right, so needless to say, in response to customer and client concerns about potential shortages that these tariff bottlenecks could potentially create, you are actively helping them build up inventories in the US, yes, Erez?
Absolutely. This is our number one mission, to ensure sustainability of supply.
Understood. Is Dr. Reddy's open to manufacturing in the United States? And you've made clear that the recent divestment of the Shreveport facility was unrelated to tariffs, but help us understand, Erez, why that didn't work for Dr. Reddy's, and what could work? What manufacturing locations and partnerships and opportunities are you exploring?
Yeah, so we are definitely open. Normally, you want to make in the United States things that make sense to make in the United States. For example, sterile that contain bags of water. There's no point to ship water from India to the US. Better to do it in the US. There is no cost advantage between the countries. You have a products that mostly fit, or most of the consumption in the world is in the United States. So normally this kind of products better to make it in the United States, etc. A controlled substance and other products like that. We are very much open to it. The Shreveport plant indeed did not work out for us. It was based on relatively odd product, very large type of products that eventually lost market share because of cost. And it was a process of about 4 years. It did not start yesterday, so it was nothing to do with the tariff. But to make the long story short, we are open, we are looking for opportunities, and if it will come, we will definitely go for it.
Erez, Novo Nordisk's patent on semaglutide, pardon me, I knew I'd get that wrong, is set to expire in India. Can you share how Dr. Reddy's plans to expand its portfolio of GLP-1 and focus on the diabetes and the obesity drug markets in India and elsewhere at a time when it is under a lot of critical and a lot of competition?
Yeah, it's a very, very important segment. Diabetic is a very, it's a disease with a high level of prevalence and just going skyrocketing actually. Only in India, more than 1/3 of the population of India are either diabetic or pre-diabetic, so it's even scary numbers. And saw it around the world. Naturally, Novo Nordisk did an amazing job introducing this product as well as other companies that are doing that. So we identified this group of products as well as other diabetic products to act on them globally. Whenever IP patents restrictions will allow us to enter, we will try to be there day one, and this is what is expected for us in semaglutide. We know it's going to be very, very competitive. Many companies will be there, and we are prepared with the relevant cost structure, whether on the API or on the dosage form or on the supply chain.
Thank you for that, Erez. How is the integration of NRT, nicotine replacement therapy, that portfolio that was acquired from Haleon, how is that progressing? And which markets do you plan to really roll out this acquired business in? And ultimately, how material to the revenue stream at Dr. Reddy's could it be?
Yeah, so it's really good for us. It gave us already this quarter about 600 CR. But so the way it works is that this is a products, actually a bunch of brands that were carved out from Haleon, and we are gradually getting them country by country. We already did UK. We are going to do next month the Nordics, and then other countries in Europe, and eventually we'll roll out it in more than 60 countries. So within a span of 12 months, either us or our distributors will directly dealing with it. We are recognizing already the entire revenues and profit as Haleon is now giving us that service, and we are now slowly taking country by country from them. So far, so good.
Erez, and it's interesting because you have a footprint in the UK, you have a footprint in the United States, and we are seeing trade deals in that direction between India and those two countries. What does a UK-India trade deal, and also waiting in the wings, of course, a possible US-India trade deal mean for Dr. Reddy's, and to what degree do you think it's going to really supercharge your business and revenue in those two very important markets?
So we are naturally very supportive of any trade deal that India is making. So we are very Indian patriotic company and obviously supporting those. Specifically for the United States, it will be very important to see what will be the impact of tariff, hopefully for the generic industry very low, or if possible even zero. This will help us a lot. In general, when you have such a things, it's allow us to look for more opportunities. So we are very much welcoming that.
Erez, on that note, we have to leave the conversation there. Thank you very much indeed for joining us on Inside India with your insights. Erez Israeli, the CEO of Dr. Reddy's Laboratories. Now, moving on, India's markets are just coming online. The Nifty 50, the benchmark, is looking like this. And as the futures were portending, a big lift and a big relief rally on the back of the ceasefire agreement, which came over the weekend. Nifty 50 up by 2.4% and moving closer towards 24,600. So big gap higher for the benchmark today on the back of the ceasefire agreement. Rupee is closed today at levels of 85.38. We'll resume trade tomorrow. Let's take a look at the sub-indexes in the broader market. And as we were talking about with Avi earlier on today, the resiliency and the story for the consumer, for finance, still keeps on trucking and hasn't been derailed by the latest round of Indo-Pakistan tensions and, in fact, getting a lift because of the ceasefire, as we mentioned. All of those subsectors up by between 2 and 3%. Moving on, State Bank of India shares are rising after it decided to divest its stake in Yes Bank. Japan's CNBC is buying that stake from SBI. A lot of acronyms there. Lin joins us to make sense of it with all the details. Hi, Lin.
Yeah, good morning to you, Sri. So this is the biggest cross-border deal to impact India's financial sector, which is known to be highly regulated as well as state-led. In terms of what we're looking at, you've got CNBC, which is a unit of SMFG, the second largest bank in Japan, looking to buy from about 8 Indian financial institutions, but led certainly by SBI there, to the tune of $158 billion. Now, in terms of why this is significant for both respective sides, for CNBC, this is an into India. The bank has been very, very aggressive, Sri, in terms of expanding. And in recent years, we've seen that expansion, particularly in Southeast Asia. But now this is a foothold into the Indian market, which, of course, is expected to continue to grow at a time when, Japan's market and Japan's economy is fairly stagnant. And also there are concerns around the broader demographic picture there as well. We also know that for Japan Inc., they are looking at that China +1, potentially looking at India as well to get that foothold into the market. So this is an opportunity as well for SMFG to service their multinationals as well. Now, in terms of Yes Bank and as far as where we're at there, we've got to keep in mind 15 years ago it had to be bailed out, led by SBI as well as other Indian financial institutions. And we've seen since that bailout that it has been able to steadily turn things around. If you look at its gross non-performing assets ratio, it's gone from around 16.5% down to about 1.6% here. So this is finding an anchor investor, right, in terms of a very well-known and established brand in SMFG. You're
going to wonder whether this opens up the floodgates and whether we could see deals structured along similar lines and whether we could see more consolidation in the Indian banking sector. Lynn, excellent report. Thank you very much indeed for that. Right, that's all the time that we have today on Inside India. Do keep watching CNBC. Access Middle East with Dan Murphy is coming up next.